Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's Crypto Blast. It is Monday the 16th of June all day. We've been away for a little bit, so welcome back to our listeners on this particular blast. As usual, Cam from Institutional Fi will be giving a rapid roundup of the latest pricing flows and institutional news in crypto markets. But before he does, I will be getting the legals out the way. So as usual, nothing discussed in this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, Institutional Fi, myself, Ryan Paisley, or indeed that of Cam O'Connor. Cam, how are you? Assuming that, no, he's been sent the invite, but he's not accepted the invite yet. And now he's just disappeared. This is a fantastic start to the Crypto Blast. So let's see what happens when he rejoins. Right. Now he's requested. So one sec. Let's see if that works. Connecting. It is. Yes. Hello, Cam.
Good. How are you?
I'm very well, my friend. How are you?
Yeah, doing well, thank you. Doing well.
Good, good, good. What's been going on in crypto?
Just a couple of things. I mean, it's been a while since we've
Yeah.
done one of these crypto blasts, so there's going to be a few odd stories popping about for the last couple of weeks. Hopefully, by the end of this, everybody will be caught up to what's been happening and feel a lot better for it. I don't know if that's the right term that I should be using, but here we go. Let's jump straight into it. So looking over to Bitcoin's price action, Bitcoin ran up to make a new all-time high of 112,000, not recently, but on May 22nd. It has since trading down within a wide 10% range and an area of demand seemingly shaping up around $103,000 to $106,000. Now BTC trades at around $106,000, but with tensions in the Middle East expanding, some volatility has been in play. As news broke last week, BTC fell more than 7%. So whilst BTC is arguably transitioning away from being considered a, quote unquote risk asset, BTC still displays risk against geopolitical headlines. And in terms of analysis on Friday, the 50-day moving average sat around $102,800, which happened to be the low of the day on Friday. Further down sits the 200-day moving average at around $95,900. And which is quite interesting to me, the 6 monthly candle, this open sits around, this current open sits around $93,500. If BTC can close out above this $93,500 level, this is actually going to make the 5th consecutive green candle on the 6 monthly chart. So, I mean, if you'd have bought back in January 2023 and just held it, yes, you'd be in profit. But if you had a strategy of opening and closing a position every 6 months, for 5 months straight, you'd be in profit, which is actually quite something, considering it's consecutive. Moving over to Ethereum, ETH, I mean, it can't seem to catch a break. After consolidating under $2,800, ETH rallied 20% from the upside from 2380, touching $2,900. However, this happened the day of the tensions in the Middle East happened and the war broke out. So this rally was cut short with ETH dipping back below $2,400. So is this another dip buying opportunity or a failed breakout? Let's wait and see. But ETH currently is trading at $2,595. And then moving down the market cap list, Solana trading at $155. XRP at $2.21 and BNB is at $653 unchanged from Friday. So yeah, that brings us up to date on that side of thing. If we jump into news and flows, digital assets investment products saw $1.9 billion in inflows last week, marking the 9th consecutive week on a record year-to-date total of $13.2 billion. Bitcoin rebounded with the US dollars seeing $1.3 billion in flows, while Ethereum saw around about $583 million in inflows, its strongest month to date since February. So yeah, it's been quite an interesting couple of weeks in the side of crypto. We saw, I don't know why I'm bringing it back up again because it definitely feels like it happened such a long time ago, but yeah, a roller coaster that was triggered after Elon Musk and Donald Trump got into a public spat. The only reason I mention it is because in terms of crypto, once they started arguing on Twitter, well, formerly Twitter X, we saw $800 million in liquidations happen over the next several hours. So it's not nothing. That's definitely something. There was so much leverage on the table there that, over $800 million got wiped out.
Right, and you think this
Go
is
on.
like directly related to like the falling outs, like public spats we saw between Trump and Musk, or
I think so. I think so. If you look at the timelines, it definitely triggered some liquidations. And then if you look at, look more into it, this triggered further liquidations. It triggered further liquidations as the price of BTC kept running down. It eventually stopped at around $102,000. But again, at that point, so much liquidity had been wiped off in leverage futures plays, alone.
so what would be? I understand like how it's like anything a catalyst can then snowball, but why would that be even a catalyst? That just those two falling out.
I think just because of the publicity side of it and how closely related they are to talking about digital assets, especially Trump being pro, all of a sudden if he's going against Musk, who's also pro Bitcoin and stuff like that, I
Okay,
think it
got you.
just triggered I don't think the initial reaction was too big, but it was just big enough to essentially create a snowball
Right, got you.
effect in digital assets.
Yeah, cool.
But of course, not being that big of a story, everything eventually rebounded and we find
Yeah,
ourselves back at $107,000 almost.
yeah.
So, so another interesting thing that happened, Connecticut passed a law to ban state investments in Bitcoin. So it exactly prohibits the state from accepting, holding or investing in I'm going to use this term, virtual currencies, which is what they use. So it also imposed several new requirements on money transmitters. Now, this term virtual currencies that they've used, outside the realms of normality that we've seen in terms of cryptocurrency or digital assets. So I looked in a little bit more as to the meaning underneath virtual currencies that they were going off of, and this means any type of digital unit that is used as a medium of exchange or a form of digital stored value, or that is incorporated into a payment system technology. So they're really encompassing the whole digital asset sector. Connecticut doesn't want to be involved in it. So there we go. Kind of ruling them out for any further developments in the near future for sure. Another story, again, we kind of touched on it a little bit with the Ethereum flows. It really is shaping up with the Ethereum ecosystem. Institutional money is definitely wanting to be a part of the Ethereum ETFs. Over the past couple of weeks, it seems to be all about them. Just last Wednesday, Ethereum ETFs saw a massive $240 million pour in on a net
Oof.
basis. That is its second highest single day inflow this year. BlackRock's ETH led the charge with around $160 million of that, but Fidelity and Grayscale weren't far behind with their net basis pull-ins throughout the week. This isn't either a one-off either. On Friday, the ETFs were actually on a 19-day of straight inflows for the Ethereum ETFs. That's almost a 3 weeks of consecutive strong demand. Over the past couple of weeks, total inflows for Ethereum have amounted to $1.2 billion, which is quite crazy. If you
Monster.
look back, absolute monster, especially if you look back at the past price action Ethereum's price action over the past couple of months. It doesn't necessarily reflect that, or does it? Sadly, this was brought to a close, with geopolitical headlines coming in on Friday. But again, the outflow was tiny. It was $2 million. So if you look at the bar chart, it barely registers as a red dot, if I'm honest, compared to the amount of
Merely a
green that's been
flesh
flowing
wound.
in.
Merely a flesh
That's
wound.
exactly it. That's exactly it. So we'll look today. Obviously, it's been quite a positive flows over the last 3 days. You covered it quite well on the morning blast and with the AlphaPix lads on Friday. Short-term negative reaction, but when they dig into the news headlines a little bit deeper, they go, oh, hold on a minute, maybe this isn't as bad as we initially thought. And the dip seemingly gets bought. So whether that continues throughout the week, we'll have to pay
So
attention.
you think
And
the flows will be definitely following the generic risk on, risk off?
yeah,
Cool.
especially for Bitcoin and Ethereum.
Yeah.
So over the past 2 weeks as well, the US Senate has been full of drama around the Genesis Act. I do say drama. That's the big stablecoin bill that everybody is watching at the moment. After some back and forth, the Senate voted 66 to 32 to move the bill forward, which means it's one step closer to becoming a law. What does this bill do? I know we've talked about it several times, but just in case this is your first time listening into the Crypto Blast, it sets up rules for how stablecoins can be issued in the US. So currently under the bill as it stands, if you're under $10 billion in market cap or you're regulated by states, but if you're bigger, the Fed steps in. Issuers have to hold enough reserves to back their coins, and there are new protections for users and some tighter rules for foreign issuers. There's even a ban on big tech companies like Meta or Google launching their own stablecoins. That's going to come into play in a moment with another new story. Now, not everybody's happy about it. Senator Elizabeth Warren and some other Democrats are worried about the bill doesn't have enough safeguards and it could benefit certain political figures. But again, after some last minute changes, it seems most have gotten on board by now. So some other news headlines that have followed, I'll rattle through them. Again, over the last couple of weeks, Argentina's anti-corruption office cleared President Milei in the Libra crypto promotion case, which, if everybody's memories need to be jogged, this was the meme coin launch that the Argentinian president promoted quite heavily, which then rugged within just a few hours, taking billions of dollars away from its market cap. India's RBI governor says that the central bank's stance on cryptocurrency remains unchanged as policy review continues. They're essentially against digital assets and digital asset adoption. Japan's Metaplanet launched a $5.4 billion Bitcoin equity raise with Japan's first premium strike warrants. Metaplanet actually just increased its treasury reserves to 10,000 BTC following their last edition of which totaled around 8,888 BTC. So they are holding more than ever on their balance sheets. Uber plans to add Bitcoin and other cryptocurrencies as payment, but won't hold or invest them. Ripple announces funding for Japanese Web3 startups building on the XRP ledger through a new grant program. A Paris-based blockchain group announced to raise another $340 million to build its Bitcoin treasury. There was a UK firm that added BTC to its treasury, which I thought was quite interesting. And Chainlink is facilitating the structure of secure exchange of a Hong Kong CBDC and the Australian dollar stablecoin. So massive developments continue on the Chainlink side. And the SEC chair says Commission is working on a policy to exempt DeFi platforms from regulatory restrictions. There was an ETF that was proposed from Canary Capital to create a trust in Delaware for a proposal of an injective staking ETF. That is with the ticker ING, injective, but again, including the staking mechanism. A Coinbase survey showed that 60% of Fortune 500 companies are working on blockchain projects. Now that's an interesting headline, and the data actually goes to show a little bit more about that. But yeah, 60% of Fortune 500 companies are working on blockchain projects. I'm surprised it's not bigger. I'm joking, of course. As you look back just a few years ago, that figure seemed unrealistic, but there it is, 60% of Fortune 500 companies. This is another interesting story. Cardano founder Charles Hoskin unveils Cardinal, the first Bitcoin DeFi protocol on Cardano. And the US SEC told potential Solana ETF issuers to file updated S1 forms within a week. That was last week, and we've since seen all the issuers file their updated S1s forms with more mechanisms around staking to include it, not to exclude it, which was a big talking point over the last couple of weeks regarding whether that staking mechanism was going to be added or withdrawn, because not all of the ETFs had it, but it looks like we could be seeing a Solana spot ETF coming within a few weeks that contains the staking mechanism. And if that's the case, then what's stopping BTC and Ethereum staking with their ETFs? It's a question for the future. Trump-backed World Liberty Finance USD1 stablecoin launches on the Tron network. That was interesting. And the Bank of America CEO confirms that it's developing its own stablecoin. I know we've been on the ball with this over the last couple of months, but
It's never
this
ending.
it is never ending. I don't think it's stopping anytime soon. The stable coins are the hot topic. And, if you're listening and you're wondering, well, what is it about stable coins? I'm currently writing, an educational primer for stable coins, and that will be released, by the end of this week over on my Substack. Um, delving into it, what they are, the different plays, because not all stable coins are created equal. They could be back to physical cash. They could be, back to treasuries. They could be back to gold. And some of them are even pegged to other crypto assets. Now, I don't know about you, but I'm not entirely sure if I want to get on board with a stable coin that's pegged to a fluctuating digital asset that's highly volatile. So, we go down into that a little bit deeper on the article coming out very, very soon. As we just mentioned, that the Senate will hold its final vote on the Genius Act, a stablecoin bill on June 17th. So that is tomorrow. And lastly, so Amazon and Walmart are exploring plans to launch their own stablecoin. Now I know this was, if you're listening into the morning market blast, you would have heard this story come up from yourself, Brian,
Yeah.
and Michael. So according to recent reports, the Wall Street Journal, and other sources, retail giants Amazon and Walmart are exploring the possibility of launching their own US dollar backed stablecoins. Now, again, as the Genius bill currently sits, I'm not entirely sure whether that would be possible. So again, we have to kind of wait the final bill as to see if they can actually launch their own products. But if we go down, it does look like they could be partnering with third party applicants, in order to create the stable coin. But again, this is to reduce the transaction costs as both companies face billions of dollars in annual credit and debit card processing fees. It's estimated to be over $14 billion combined
Oof.
between the two companies. So stablecoins could bypass the traditional intermediaries like Visa and MasterCard, offering faster and cheaper processing fees. So
And again,
you
like
can
we've
kind of see it and know, go on.
yeah, like we've mentioned countless times before with all this kind of stuff, it just lowers the barrier to entry and removes that fear that some kind of have over the whole, and doing air quotes, no one can see me, crypto. So again, it's just further adds to that mass adoption of the technology, which I think is a great thing.
If that's not on a t-shirt yet, I
I
think
know,
you're
right?
missing a trick.
Exactly. I would do the QR code analogy, but I think I overplay that one. I'll save that one for next week.
Yeah, you have to just leave it out for a couple of days and then bring it back.
Yeah, exactly.
What's the QR one, Ryan? I want to know it. Tell me in a few days' time.
I'll tell you in a few days' time.
Awesome. I think that's going to be about it from me. Just a last note is that I'll be transitioning my Substack from its current state into the institutional finance Substack.
Good
So,
stuff.
just
Good stuff.
merging two vehicles to be a little bit more professional.
Yeah.
The DGen plays were great back in the day, but now we want to make sure
Time to
that,
grow up and put a
there's a
tie on.
well, that's exactly it. And for those that know me, I often have a tie on, so it just makes sense.
Exactly that. Exactly that. Well, well, thank you for that, Cam. Just one thing that did land whilst we were talking is Mr. Saylor, his strategy. I can't say strategy without saying MicroStrategy. Apparently, they bought 10,100 bitcoins worth just over $1 billion. Which does follow through what he hinted at yesterday, I believe, where he said the bigger dots are better when someone posted the chart that everyone loves where it's got the dots for every time they buy. So again, I'm still not completely sure why people are buying Bitcoin through strategy, because I think there's far better ways to do it no matter what your situation is. But there you go. He's rinsing it still. But Cam, thank you so much for the update. Welcome back. It's good to have you back on. Listeners, thank you so much for tuning in. We really do appreciate you. More to come. And also now, well, holiday travels are over and whatnot. I think it's time for me and Cam to push on with a few more projects as well that we've got lined up. So big things going to be happening in the near term. Hopefully, fingers crossed, touch wood. But anyway, whatever you're doing today, keep it tight, stay safe, and we'll see you tomorrow. Goodbye.
See you then.